Yeah, we've got a possible double top on the Dow. I've talked about this. Again, S&P could be forming a head and shoulders along with NASDAQ, but they may not be done with the head formation if, in fact, that pattern is setting up. The Dow is approaching this level right here. We may find a bottom here today or tomorrow. Again, the VIX is predicting a rebound. If we do, the stochastic could try to recycle back up. The MACD right here is just breaching the center line. Watching to see if we attempt a recovery on the Dow that has been leading the charge lower. We've had a losing streak now for a week and a half here on the Dow. Selling continues, and the Dow is going to break the confirmation line here on daily chart. My guess is we're going to try to bounce. Now the S&P saw momentum change yesterday. We got it today on NASDAQ dropping below the 10-period moving average. We're getting the second red bar. The MACD is not yet rolled over yet. Again, we find a bottom or go a little bit lower and find a bottom or just above that 20-period moving average. Do we attempt to rebound? We'll see NASDAQ and S&P try to move up towards those upper boundaries. Dow, which is very oversold, attempts to recovery. You can see that with NASDAQ and S&P as well. We'll be watching. It becomes of this. Is this going to be short-lived? Telling us we're either going down or we're correcting a pullback, one or the other, that we're either reversing or getting a pullback. Close strong or weak? Do these divergences that are forming on the oscillators in the weekly time frame and the RSIs in the weekly time frame, are they now playing out or a little bit more work to be done? I do expect them to play out. They could be done. We need to see more evidence if that is in fact the case. It could still just be a pullback. True for the S&P. Again, I talked about, do we get a strong close or a weak close? We'll be watching to see how we close out on Friday. These divergences are still under construction. They may not be done. Do we close strong? Do we close weak? And then if we do close down for the week, we got to start taking out the 10-week moving average to start the reversal process and get it underway. S&P got the reversal yesterday with momentum here. We're below the 10 period. We're just below the 20 now. Again, we've had the red bars going on. Can we get a rebound? Do we end up forming a divergence on the RSI and the awesome oscillator here before all is said and done and still try to go to new highs? If we do, that upper boundary is directly overhead. Is this a pullback? Is this the start of a reversal? The VIX begins to pull back to try to fill the gap. The market could attempt a recovery. The VIX is predicting an up day for Friday. 85% chance, at least percent chance it fails. So again, I'll be watching. Do we stall here at the 200 with a possible hanging man? So we could attempt a recovery. Clearly seeing momentum shift. A couple of trending signals are starting to change, but mixed bag at this point. Please support the channel with the link directly below. That allows me to be able to provide you this information. If you could take a moment to do that, I would really, really appreciate it. The link below to take you to a secured site. You can donate any amount you want, recurring donation. Please consider helping out today. I do need your help at this time. Thank you for your consideration for that. I've been warning you that momentum, as it had started to wane, that we started seeing signs of distribution. I told you that could be a top or, again, just a sign that we're getting selling into the rally and still not quite completing the top yet. We got signals over here. At the bottom, we got warning signs that accumulation was taking place, but we still made a lower low and more accumulation took place. So again, we'll see what happens. Over here, we saw some distribution, but it only led to a sideways correction. This could only lead to a pullback. So again, we need to see more trending signals begin to turn. This is a trending signal. My critical mass cloud, it's still bullish at this point, but we are seeing the signs of distribution and liquidation. Until investors bought it up, institutions are selling into the rally again, just like they did back over at the previous peak. And again, that's why I'm continuing to show you these signs of distribution. Now, we don't have a sell signal yet. Doesn't mean we won't get one. Other signals are sell signals. So we're either going sideways or down at the moment. Here, we still have a bullish signal, but obvious signs of distribution here. With my critical mass cloud. We are seeing momentum shifts, and again, that means we're either going down now or we're going sideways. And if we're going sideways, it's a pullback correction. We could still come up and hit this upper channel line that I've been talking about. If we start seeing trending signals all begin to turn back, and a couple of them have turned, but if we see the majority of them begin to turn, and that may be it, and the bearish engulfing gets a confirmation follow through, we start heading down and we start forming a possible head and shoulders pattern. The thing that may be, still get the pattern, but it's not yet done if we rally into the Fed meeting to June 12th, which meetings have been calling the turns in the market. The previous top and the bottom were both Fed meetings. Now, S&P went slightly higher by 3 points. NASDAQ and the Dow topped the day after the Fed. But the Fed meetings have been calling the tops and the bottoms or continuations of the trend. Very good chance that if we do attempt to rebound, rally up to this trend line into the Fed meeting. If we just start to sell off, then it's close but no cigar, and we'll see more signals turn bearish. But the bearish signals are telling us, hey, we're either going down now with momentum, down, or we're going sideways. So I'll be watching, do we expect a bigger sell-off right now, or is this just a pullback and we still go higher? Talk more about that in just a bit. As far as the trend, we got an orange bar yesterday. Now we're getting a red bar today. Momentum has shifted here, as now in other places, but the trend is still hanging in there. Couple signals turned, but most of them are still bullish. Momentum signals are bearish. So I'll be watching, do the trend signals start changing? We stop making new highs? Do bars remain red, or do they flip back? If they flip back to green, we try to rally with the PCE or with some type of earnings event or whatever the catalyst may be. Then the bars could turn back to green. That would suggest a sideways move. If they remain red, then swing trend signals all begin to turn bearish. Then we can begin a bigger move down towards this area down over here. Towards the 100 period moving average. And when we saw momentum with the momentum line turn bearish a few days ago, as I talked about at the time, and I told you again, it can mean a correction or a reversal. Well, we're getting a correction so far. Now a bearish sell signal taking out the cloud, and a swing trend line turn bearish as well. Not yet being confirmed here, going negative. Again, I'll be watching to see what happens from here. A bigger sell-off, or is the VIX correct and we attempt a recovery? The signals are telling us we're either going sideways or down now. And we're taking out here the rainbow cloud being taken out could start a larger reversal, or if we attempt a quick recovery with the PCE, it could look something like this. But the 60-minute charts are pretty oversold at this point, so we'll be watching to see, especially the Dow 60-minute chart, we'll be watching to see if we attempt a recovery with the PCE data or not. Quickly going back here to momentum, turning down again, signals have called short-term swing moves or sideways moves. Again, if we see it quickly turn back to bullish, then you could still reach that upper boundary and get something like what you had here, or something like what you had over here in a consolidation, in a pullback. Start seeing more signals turn bearish, then again, you can get a trending move. Here we had it up, here we had it down. See what happens with the PCE data. Do we attempt to rally into the Fed meeting, or do we just start to turn here? See more signals turn bearish, validating a shift in momentum. And again, seeing momentum shift, some trend signals turn bearish. A lot of them are still bullish here. Critical mass, we're below it, but it's still going sideways. It's still positive. We hold below it, starts dropping, turning to red, we get something like this. But if we go sideways and get back above it, then we can resume the advance. So again, I'm showing you the Dow being so oversold, coming back and giving back all of the gains, whereas the S&P has not. We've come back to fill this gap, where the Dow has come back to fill the gap here from May 3rd. So if the Dow attempts a recovery down in this area, then again, we still may see the S&P try to rally higher. Is this a correction or the start of the reversal? Got the red bars for short-term momentum. Is that just reflecting term pullback like the bars over here? Do we see them turn back to green? If they go back and forth, you've got a sideways kind of a move. If they remain red, you get more of a trending move. The bars reflecting the short-term momentum. Trend is still positive. Oscillators are still hanging in there, but like I said, swing trend line turning bearish. Do that when you go sideways like we did over here. Also do that when you start a reversal. So again, what happens with that PCE data on Friday? If we try to rebound and recover, we still may see a divergence develop on some of these indicators in the more recent price action going up into the upper boundary of the channel. This is a Dow 30-minute chart. At the divergence top over here, we began to see signals turn bearish. Again, the Dow's been leading the market lower. Look at that. If it attempts to turn back up, then I'll be watching to see what happens. Momentum signals on the S&P 500. Now here I have momentum, which is showing flatlined. It's turned back to red and been going back and forth from blue to red, just showing weakening momentum, which we've seen now, but the trend is still bullish. Momentum is still bullish. Do we go up and end up getting a divergence on indicators? Do we still go up and try to hit this upper channel line right here before all is said and done? Or do we just start seeing everything turn bearish, start heading back towards the low there in April to possibly carve out this head and shoulders pattern, or has a potential double top? We rally with the PCE data, or do we sell off with it further, are doing some serious technical damage? Here, momentum is bearish, but the trend is still bullish. That's where we're at on most indicators. I told you right after the market closed, again, we have earnings. Salesforce was a drag on the Dow, ended up dropping by 20%. The Dow sank further to fill a gap I talked about yesterday. The S&P is filling a gap at higher levels. This is predicting that we're going to have a rally with the PCE data. At least there's an 85% chance that that is going to happen, 15% chance it won't. It's predicting a bounce or a short-term bottom. Talk about that shortly. The Dow was down by 0.86%, down 330 points. It was down by over 1% at the lows of the session. Closed near them. Possible bottoming tail on the hourly chart. I'll show you that. It's filling the gap we talked about yesterday. S&P down 0.60%, down 31.5 points to 52.35. The nasdaq down just over 1%. The Russell is up 1%, and the VIX ended up with a gain. It was actually down for a good part of the session, but recovered slightly, returning off of the 200-period moving average. VIX had a big red bar during the session. It was down 2.75%, going back and testing the lows. The previous day we had that gap higher, but then we rebounded. The market sold off at the end of the session, and we created a possible hanging man candlestick at the 200-period moving average. Going to rebound, as the VIX is predicting from yesterday's gain of over 10%. If we can rebound the next two sessions, which it didn't do it today, so tomorrow the VIX is predicting an 85% chance that we have an up day. If we do, can we establish a short-term bottom, at least get a bounce? So again, the VIX is predicting that 15% chance that signal fails. But again, we have VIX down 3%, nearly 3% at the lows of the session, then rebounding with a gain of just over 1%, stalling there at the 200-period moving average. Again, the VIX is probably going to go back and fill this gap. This is we're probably going to see a recovery on the Dow and on the S&P 500. Get a recovery, we could recover into the Fed meeting, the FOMC meeting, just under 2 weeks from now on June 12th, which is the same day we'll get the inflation data, the CPI inflation data. One of those events could push prices back down if the S&P is setting up a higher low here on a pullback and it goes to one more push higher. Again, we could still slam into that upper boundary. It could be close but no cigar. Start seeing a bunch of signals begin to turn bearish, but it also just may be a pullback. The Dow may have peaked with the double top. The S&P may go higher and hit that upper boundary. Dow had a 2.5% sell-off, over a 2.5% sell-off last week, and this week it continued to sell off. This is the daily chart. Was a divergence on the weekly chart. We reached an extreme here, almost at the same level as over here. So again, do we end up getting a rebound back up? This is a gap I told you about to be watching in yesterday's video. I told you we're likely going to try to fill that gap. See if we can get some kind of rebound. We have a possible double top with the neckline right here with the first peak here and the second peak over here, whereas the S&P is coming back fill a gap way up here. The Dow is down here filling the May 3rd gap, giving back, the rally. These are back-to-back bullish candlesticks right here. Now the S&P has pulled back a little bit. The Dow has given back the gains of the entire advance. So again, we'll be watching to see what happens. Do we come back and start taking this level out, or do we find a bottom here somewhere and start making our way back up to establish a counter trend? If this is double top, we will stop making new highs on the Dow, and you'll have a double top confirmation, eventually breaking the trough low between the two peaks. I talked about the Dow in yesterday's video coming back to fill this gap from May 3rd. Again, it did do that. Now I'm going to be watching to see what happens here. Get confirmation of a higher low here. We got a little bottoming tail here on the 60-minute chart. Or do we get a divergence if we can establish a higher low here above the trough low that separates the two peaks? So we can attempt some kind of rebound, or we might go closer to this support level before all is said and done. And again, could form a divergence. Right now we got a slightly higher low here, but we could form a divergence here and then begin to claw our way back up. And then we'll be watching the peak over here from this divergence that was the peak of our rising wedge pattern on the Dow. Possible double top on the Dow. VIX is correct, and we establish a rebound tomorrow. Then we'll be watching to see if we carve out a bottom here, or maybe tomorrow Dow, and then get a rebound. The reason why I'm showing you the Dow is it led the charge down the last time. When it did, it had a boatload of gaps. We can go back and fill those gaps, and I told you if we did, we can see the S&P fill the gap at 5,200 or move to a new high. The Dow moved to a new high just above 40,000 and then retreated. So we'll be watching that. Dow led the sell-off the last time around. The Dow has led the sell-off this time, but the S&P is not back down here at the May 3rd gap. It's at higher levels, nowhere near giving back all of the gains. So the S&P can still move to the upper boundary of the channel. Uncertain at this time if the Dow will be able to move to a new high to do the same. Very oversold ahead of the PCE inflation data, which is expected to be soft. I covered it yesterday. Core number is expected to be the lowest all year. Could see a rebound get into the Fed meeting, into the CPI data, which will be on the 12th, just under 2 weeks from today. It's 2 weeks from yesterday for the Fed meeting and the CPI data. If we try to rally with cooler PCE, but then do we rally, and if the S&P does try to make a new high, end up the resistance levels with either the Fed or CPI, and then starting to turn down if that divergence get completed on the RSI in the weekly time frame that I've been talking about on the S&P 500. Here it is up close. Again, we had a bullish falling wedge. It got a false breakout. We could not clear with that false breakout the momentum line. Do you see this? We continue to find rejection at the momentum line all the way down after the divergence. We drop below the momentum line, and the momentum cloud have acted as resistance. And today we gapped lower and we rallied up to where? The momentum line. And then we turned off of it. You got a possible bottoming tail for a higher low, but I've marked a possible divergence that could form here as well. If we initially get a sell-off, again, you might come down further or a lot further towards the confirmation line as we saw on the daily chart. So be watching. But again, like I said, the VIX is predicting an up day by the end of tomorrow's session. So we'll be watching how it unfolds. The VIX, be wrong, there is a 15% chance that it will be, 85% chance it will be correct based on probability. So again, the Dow very oversold. I think it's going to try to form a bottom either with the higher low or go a little bit lower tomorrow and complete this divergence. And then again, if we do go a little bit lower, could get a gap and trap where we gap down and then turn back up. It really is going to depend on the inflation data. Does it come in hot or cool? Does it miss? Come in line? Does it come in better than expected? The last CPI report rallied on that. Okay, and again, after 3 hot reports, we rallied on the good report. This report is probably going to be good for the PCE, and then we'll see what happens with the next report with the CPI just under 2 weeks from now on June 12th. If we rally with the PCE, with futures or whatever, then maybe we just get a higher low here, and I'll be watching, can we clear the momentum line? Can we clear the momentum cloud? And if we do, then again, we could begin a recovery that will give us a Fibonacci retracement of this decline. If the sell-off is not done yet, then again, I'll be watching horizontal support. I'll be watching to see, does a divergence develop or not? Dow continues to sell off and have a losing streak as this possible divergence is forming or confirmation of a higher low. And I'm just showing you this because, again, the Dow has been selling off and S&P and the NASDAQ have been following. The Dow is way down here at the May 3rd gap, whereas the S&P is not. Dow is leading the market lower, at least for now. Now, here with momentum, we did complete a multiple point divergence with the Dow from these previous lows over here. So again, at extremes, we've got a divergence, and we see a rebound. Again, the RSI might just validate a higher low here if we try to rally. We did get a bottoming tail ahead of the PCE data that will be released before the market opens tomorrow. S&P is the same way. It's coming down. It doesn't have a divergence, but it's come down to extremes. Can it recycle back up? Can the Dow? Again, I think you're going to rebound at some point before we hit the confirmation line on the Dow, and that could be from the lows today or whatever lows might be made tomorrow. The Dow can rebound. S&P can still go up and hit that upper channel line that I'm looking at in the weekly time frame. S&P 500, I talked about this gap. Now, again, this gap over here from mid-May is being filled by the S&P 500. The Dow has given back the rally, and it's filling the gap from over here on May 3rd. S&P is nowhere near that. So again, if the Dow can try to find a bottom above the lows that were made there towards late April, then again, S&P still may try to rebound. It could be that we are expanding the channel. And again, I've talked about the trend line right here breaking. I talked about this trend line right here. We bounced, and it couldn't hold a support, and we gapped down and took it out. And again, so that we're now coming back to fill this gap. It's possible we have, and I talked about this channel here yesterday, possible, and we violated it slightly, but closed right about at it, a parallel boundary to this upper boundary right here. I'll be watching to see what becomes of that. Again, if the VIX is correct and we try to rally, I'll be watching to see what happens. Do we just have a pullback here and still go up and end up hitting our upper channel line there in the weekly time frame? At this divergence, that's given us a sell-off. The question now, is it just a pullback or is it a start of a reversal? But the S&P may have not topped. Dow goes up and only makes a lower high. The S&P might move to a new high. Again, it might be that we might form a multiple point divergence here. This divergence right here gave us a sell-off. It might be that we rebound back up or even go down towards the 200 and then rebound back up and still try to exceed this level. If you look at this trend line right here, it could be where we might be headed, going up to that upper boundary of the longer term channel. MACD is negative, so again, we've had this sell-off. Is it just a pullback? Are we going to recover? The VIX is predicting we're either going to get a bounce or a bottom, and we'll be watching to see how it unfolds. S&P is going to rally. We've got to get back above the momentum cloud, the momentum line, the purple line right there. I've got the 20-period moving average with it, and the 50 is above that. So we've got to clear these levels, the momentum line, the 20-period, the 50-period, and then be able to clear the trending cloud right here. We're going to attempt a recovery and come back and fill the gap, possibly attempt to make new highs. We'll be watching. You know, the market's been moving lower. We've had the 10-year rising. I've talked about this. Now it's pulling back here a little bit. If it pulls back, based on the PCE, again, it could come back towards the trend line, towards the moving averages here, and that can help the S&P still attempt to make a new high, still attempt to hit the upper channel line. This is a pullback rather than a reversal. Just as it is, but we'll see what happens. True for the dollar. The dollar pulling back today. Again, all suggesting ahead of the PCE data, suggesting market could attempt a recovery, a rebound. The PCE, which is supposed to come in on the soft side, it's supposed to be tame. It happens. I talked about it earlier in the week. We're also seeing momentum not only with the Dow down here at extremes, the Dow's forming a divergence, but we've reached extremes here on the S&P 500. So again, the extremes often mark short-term tops and bottoms or divergences. Here we had a divergence that led to this. We popped a little bit higher, and we got another one here. The extremes tend to lead to short-term tops and bottoms, and sometimes divergences form, and it just forms pullbacks or sideways moves. But this, again, could lead to a short-term bottom or sideways move. If we turn back up, we'll be watching. End up going lower. Diversions might end up forming. Saying that, look, still a possibility that we go up and we hit that upper channel line. Like I said, it may be close but no cigar if we start seeing everything turn bearish. Remember, the Dow is way down here, filling the gap down here. The S&P is not. It's filling the gap up here. So, a chance the S&P makes a new high. Daily chart, we got the bearish MACD cross. I told you again, possible head and shoulders. It could be that that's not done yet. Have lost the 10 period. Got a similar reversal to what we had over here. You got the bearish engulfing, and then you got the lower high. You got this hanging man candlestick. We got a bearish engulfing. We got the inside day, same thing here, and then you've got this hanging man looking candlestick, and now we're confirming the bearish engulfing candlestick. You need a confirmation and a follow through, and then to hold below the 10 period moving average, a market reversal. If we end up getting back above the 10 period or don't get the follow through, then again, you could still have something like this happen where, again, we're taking out the 20, we've taken out the 10. If we attempt to rebound, you can still get that. If we don't, if we continue lower and we just come back to fill these gaps, or even right now, just come back to fill these gaps and get a lower high, again, we could see more signals begin to turn bearish. But right now, we've seen momentum turn bearish. Will it be able to stay that way? In a sell-off here, we could still see a divergence begin to develop here on the RSI in the daily time frame if we attempt some kind of rebound surrounding the support. Remember, the Dow is way down here, down at, again, our back-to-back bullish candlesticks, and down here near the support there in the latter part of April. Attempts to rebound in this area, S&P could rebound up into this area. It'll take us up into the upper boundary of the channel. So again, it happens. There is a possible 5-leg structure here that could still take us higher. Again, last week we got that doji candlestick, and I told you to be watching. Is the doji going to end up marking a reversal, or is it going to be a continuation and we dance around this upper trend line for just a little while going into the Fed meeting, which is, again, less than 2 weeks from today, about 9 trading days left or so. The divergence, is it done? Possibly. I told you, watch, do we close strong or do we close weak? We'll see what happens. If we rebound tomorrow, as the VIX is predicting, we still may get like another doji-looking candlestick or something like that. If we close weak, you've got a possible 3-week evening star reversal. Again, S&P, well, the Dow turned off of this trend line right here. The S&P slightly overthrew it. NASDAQ got above it. And again, directly overhead, we have the trend line right there. As I said over the weekend, again, if we try to reach it, we may reach it and overthrow it and redefine the trend line a little bit. But it's also possible that if we turn with the doji, that we exclude the shadow here ever so slightly. And if we do exclude the shadow, you're slamming up into it. So again, we're watching the trend line closely. At a 5-week winning streak so far with this short trading week, we're now down 69 points. 1.31% on the S&P so far. Now we close the week out. And I am looking for the diversions to either be completed here or a little bit higher into the trend line, much like what we had the diversions complete over here and mark a reversal. We've talked about this at great length and detail. As I said, if we can rebound, this is a pullback rather than a reversal starting here. Possible we hit this upper boundary. It's still possible we have a 5-leg push higher here in the structure. More recent price action, the larger Elliott wave count. I have a couple different counts going, but I'm watching to see, is this a 5-leg structure off of the April low here? But what I wanted to show you is this trend line right here from these highs. Again, if we attempt to recover, if this is a wave 4, if we attempt to just get a pullback here and we resume the advance and attempt new highs, Again, these highs over here might be pointing to the next high, which is pointing up towards the upper boundary of the channel I've been talking about. Again, we may not make it there. It may be close but no cigar. There's still a strong possibility that we do, and that the head formation is still under construction. If we do get a push higher, starting with the PCE, we could rally into the CPI on June 12th and the FOMC meeting, and that would take us towards potential trend line going a little bit higher than these levels here, up towards this level that I've been talking about. What would invalidate this as a wave 4 is if we start pushing, whoops, wrong one here, pushing down below this low. If that is a wave 1, and then we got a 1, 2, 3, 4, 5, and this is an ABC for 4, then we could push on up one more time here, or go a little bit lower and push up higher. 60-minute charts are getting very oversold now. So again, I think you've got a pretty good shot. You're going to get a rebound. If we get a big rebound on the Dow, the S&P very well could move to a new high. We'll see what happens. Now, the NASDAQ did not get a doji like the S&P 500 in the weekly time frame. We did have a 5-week winning streak. We're down right now 1.43% for the week. We're down 269 points. Again, do we still reach this upper boundary of the rising wedge here, or is it close but no cigar? Again, I do expect a reversal with these divergences, and again, that's possibly underway. Can't make new highs. I still think there's a possibility we do, but we would need to begin to see a recovery with momentum in order for that to happen. Same thing over here. You've got these divergences all over the place that have led to tops and bottoms, as I've talked about. Bottom, top, and the divergence here, this short-term top that gave us the 8% sell-off, likely evolving into a larger divergence. Whether that's done or not remains to be seen. Again, the Fed meetings have been calling the turns for the market. Tops, bottoms, and continuation patterns. It could be that we attempt to rally with the PCE and possibly rally into the Fed meeting. It's a CPI that is possible with the big sell-off on the Dow back towards support, giving back the entire rally for the last several weeks, could recover off of the lows, and if so, that can help the NASDAQ and S&P reach these levels still. Have not sold off dramatically like the Dow has. I'm taking the time to show you what's going on with the Dow. It's leading the charge, suggesting there are problems. We're likely missing a topping process with these divergences. MACD rolled over on S&P. It has not rolled over on NASDAQ yet. And again, we did take out the 10. Again, if this is just a pullback, we could still go higher, hit the upper Bollinger Band, and hit the upper rising resistance trend line. Same thing here as the S&P. You've got a possible head and shoulders. You've got a possible double top with the Dow, or again, it may not be done yet. We may get one more push higher and then come down. That very well could be. Have to see a recovery. We're still above the 20. The S&P is slightly taking it out, but we're below the 10 on both.